Welcome back to Everything Money. In this video, you will learn about Intuit. We will go over the financials. We will show you our software and how you can transfer these financials through a fundamental analysis into a stock price. We'll show you what you should be paying for this stock moving forward with our infamous stock analyzer tool. And if you want to trade Intuit at a quicker pace, we will head over to Mo. He will show you the charts and the trends. But first, why should you watch this video? I bring your questions about this software company, about QuickBooks and all of it, to a couple guys who own and operate over $100 million in real estate, multiple businesses, and stocks. They will answer your questions moving forward and give you a mindset of investing with this company. Paul, what do you think about this? I know you use this. I use QuickBooks. I love it. Let's talk about it.
All right, so first off, follow us on Instagram. We have a new Everything Money investing account, and then follow us personally because my mom called me yesterday and said, why isn't your Instagram account bigger?
This was a running joke. This is real?
No, this is not real, but it's funny to say.
Okay, go on.
All right, so Intuit. So here's our Everything Money software. We go to our tools and the 8 pillars. We type in Intuit.
Paul, you use QuickBooks, right?
So that's the thing. Mo came into my office yesterday and he started talking about moats. And, Warren Buffett talks about moats a lot. And he says, hey, this company has a moat. I'm going to sound very ignorant right now when I say this. Ignorant is, I don't know if I buy into the whole moat business. I think it's kind of a justification. Because he also says Geico's moat is low-cost provider. I just don't believe in low-cost provider being the moat for anything. Because you win on price, you lose on price. I just don't like that method. So I will say, though, with Intuit, I Googled with Mo right there. I said, let me Google biggest competitors to QuickBooks.
Can you name them?
That's exactly it. I named 3 of them. I knew one only because of some obscure thing 5 years ago. Mo was like, I've never heard any of these. QuickBooks is the standard.
What's the alternative?
I already tried the other 3. Sage is one of them. That's the one I knew.
That just shows you how dominant they are.
And that's the point. It's like
Chuck E. Cheese is one, I think.
Chuck E. Cheese.
They're good.
They're a conglomerate.
They have good pizza.
Paul, not only do we use it for our taxes for our businesses, my couple, but you can now invoice people quite easier. So when I need to invoice someone quickly and then get it into my tax records, it's easier than doing something like
you don't even have to get it in. It just automatically does it for you.
That's what I'm saying. So
guys, not only that, I use it for my I run my life as a business. I use it for my personal expenses, everything.
Yeah, I do everything, money in, money out, credit cards, everything. That way I can see my expenses every single month and I can do my budgets and all that stuff.
Should we get into the financials, baby? Yeah.
Okay, so here's our Everything Money software. Let's look at the chart for the last, oh my God, look at that. 1994. The stock was at $3.80 at $6.35 right now.
Cha-ching.
10 years ago, the stock was at $50. Yeah! All right, so it's gained quite a bit of traction. Okay, so
market cap.
It's a $175 billion company. So our first pillar is we want the 5-year PE being less than 22.5. Okay, it is 111. That's pretty high. The 1-year PE is 84. So this automatically tells me this is expensive, right? Now, can they grow into that value? That's the question we have to ask. This is a very high number, folks. Very, very high number. Pillar number 2, 5-year return on invested capital. We want it over 9%, and it's 19.3. That's a check mark. So what this means, guys, is they're able to make a lot of money very efficiently off the capital that's invested in the business through debt and equity.
Is this typical for software companies?
Well, it's typically high, but this is a very high number. 19.3, that's a very, very significant number. I like seeing that. Now, you should be willing to pay a premium for high return on invested capital, but the question is, how much of a premium? That's always the question whenever we look at any sort of high growth investment or something that gets a good return. How much is too much? And that's what we're trying to understand. So far, 1X and 1 check. There's an adorable little dividend here.
Oh, how cute.
Of 0.4%. And on our software, we list the dividends paid of $646 million, and then we compare it to the 5-year free cash flow and the last year free cash flow. So the 5-year average is $2.2 billion, and last year they did $3 billion. So it shows right here, they can easily afford this dividend. Now, doing some research into it.
Please do.
Nope, nothing about the dividend.
Okay, keep going.
Okay, so pillar number 3 is revenue growth of the last 5 years. So we go to the income statement in our software, and we see 5.2 billion to 9.6. That's a check mark. Now, they do have an acquisition in here. I was reading about them, and they did buy Credit Karma. I have no idea
Me neither. I just looked it up. Apparently, you can get your free credit score. This is a big thing I see on TV. It's like
everywhere.
Everyone trying to get their credit score. I don't even know what mine is, but I mean, apparently
mine's 790.
Is it that good?
Yeah, U.S. Bank.
Like 400?
What was that?
Didn't your credit used to be like 400?
Come on, really? 613 was my low, and but it tends to happen that way. I have U.S. Bank and I have LifeLock, and they provide me my credit score all the time.
I'm not surprised you know your credit count, but not your cholesterol. I mean, it's just,
I need to know my cholesterol.
good for you.
Okay. Pillar number 4 is net income growth. So again, we go to the income statement. We scroll down a bit. 985 to 2 billion.
That's okay.
Check mark. Now here's the interesting part here. Well, not interesting. Here's what I like. 792, 858, 907, 365. So that's obviously an aberration. 979, 985, 1.3, 1.5, 1.8, 2 billion. What do we see here, Sethi?
Slow and steady.
Slow and steady. I love slow and steady.
And not only that, I love seeing that it was slow and steady, but they didn't have a COVID spike. It's consistent.
Shares outstanding is pillar number 5, Paul.
Okay, shares outstanding. People couldn't pay their QuickBooks. Now, guys, this is the silent killer for all investments. What we want to see is shares decreasing if the stock is reasonably priced. This stock is currently massively overpriced. We don't want the company buying back shares at very high values because that's like buying another company at a high value. So we go down the bottom of the income statement, 257 to 273 million. That's an X in the sense that they're increasing the shares outstanding, but I do understand why they're doing that. And it was a big jump in the last year. Look at this.
Couldn't that have been the acquisition?
Maybe. Credit Karma is what they did already, and they're doing another
MailChimp.
MailChimp's huge.
Yeah, MailChimp is huge. I think I saw something like $800 million in revenue is MailChimp. And they bought for like 10 or 12 billion dollars by 12 times revenue. That's a lot.
You guys use MailChimp, right? Everything Money uses it?
Yeah.
My businesses use it? Yeah, I like it. It's simple. All right, keep going.
So far we have a lot of X's and a few checks. We have 3 checks and only 2 X's, I guess, right? PE, 5-year PE, and shares outstanding. Okay, So now, pillar number 5 has to do with debt.
Pillar number 6.
Pillar number 6, same thing, has to do with debt. I'm starting to sound like you, Seth.
Look at you go.
So, guys, just like your personal life, if you have less debt, you are less likely to go bankrupt. We want companies that can sustain for long periods of time and build, especially a company with such a high return on invested capital. We want them to be able to stay in the game longer so they can keep getting that high return on invested capital and keep making you a ton of money. So what do? We go back to the main page. We go to the 5-year average free cash flow, 2.2 billion. We multiply it by 5. That's $11 billion. We want their long-term liabilities to be under $11 billion. Okay, so we go to the balance sheet, scroll up to the top here, go to the balance sheet, scroll to the bottom, $3 billion. They can pay off their long-term liabilities in a year and 5 months. That's pretty solid. That's really solid. Okay, pillar number 7.
Free cash flow, baby.
Free cash flow is our big thing. We want to see free cash flow growth. Seth, please explain to everybody everything about free cash flow.
Oh, it's just wonderful.
Sick statement.
This is all the generalities other YouTubers use, Paul. It's great financials.
Yeah, that's true.
It's cash from operations minus capital expenditures.
Yep.
You like this over just looking at the income.
Yep.
And out of this pot of money, they can issue dividends. They can buy back shares. They can invest in themselves. They can make acquisitions, which they have, and they can pay down debt. Paul, you know this.
Praise
Why
the
do I
Lord
even
Jesus
have to tell
Christ,
you?
my Savior
Why do I have to
above.
tell you
Seth
this?
got it right.
Seth is flossing this morning.
5 things you can do with the free cash flow. Now, guys, this is the cash flow statement that's on our software. Now, your Uncle Paul here loves you so dearly that he added this line right here to the cash flow statement, which isn't on any other cash flow statement, so it does the math for you. We go to 5 years ago, 1.37 billion. Last year, 3.13. Uncle Seth, look at their free cash flow over the last 10 years. 1.05, 1.16, 1.26, 1.33, 938, 1.37, 1.99, 2.17, 2.28, 3.13. Do we like this?
Yes.
Yes, we do. Okay, so our final metric.
Pillar number 8, baby.
Pillar number 8, we take the 5-year average free cash flow. We multiply it by 20. What we're trying to do here is we're trying to get some sort of value for the company. It's a starting point. Remember, companies that are growing fast or have high returns on invested capital, you want to pay a premium for. This is a starting point. 2.2 billion times 20 is $44 billion. What's the actual retail value of Intuit?
Did you watch Price is Right growing up as a kid, Bob Barker?
Why do I think I just said that?
175 billion.
175 billion. Now, this is insane. This is a massive X. This is the biggest X you could possibly imagine. My guess is that the growth rate will not justify it, because in order to go from 44 billion to 175, you have to have massive growth. And we saw in the 5-year PE that there was that is a huge number of 111. So it just shows me that this is a very, very, very overvalued company. We're gonna use our stock analyzer tool right now, next actually, but first I'll show you guys, if you hate doing the math, this 8 pillars tab here just helps you out a ton. And what do we have our biggest X's on, Uncle Seth?
Valuation?
Yeah, I mean, shares outstanding is up, but you know what? They issued a lot of shares in the last year. I have to figure out what that's for. So I'm not exactly worried about that with such a high PE. I'm actually happy they did that as opposed to taking on debt. But these valuations are just insane. So it's just something to consider. Now, I liked everything else about the company. I like the QuickBooks. I like everything. I mean, guys, we're a company that does 20 million in revenue, and we use QuickBooks still. I love QuickBooks. You know, I've had one person ever say QuickBooks is for amateurs. I disagree. I think QuickBooks is a very wonderful, even for our business, we have 8-9 businesses upstairs. Our QuickBooks, I think it's phenomenal. And so what is it, $40 a month per LLC? It's nothing.
Yeah.
So anyways, to me, the subscription model, they used to have the software on the computer. You bought it one time. I love the subscription model way more. So anyhow, now we're going to use a stock analyzer tool. This has been super popular for people.
Super de duper.
So do any of us think that Intuit will not be around in 10 years?
No.
Uncle Seth?
It's staying, baby. I love it.
Yeah, it's staying. How long? I mean, it's been around forever. So let's do a 10-year analysis. You can pick 1 to 20. And let's do 3, love a number of assumptions. We can do 1, 2, or 3. Let's do 3 because everybody loves it when I do 3. All right, guys. Here's our growth levels. 9.6, 16.7, 25.4. It's actually gotten faster as time has gone on. But they had 2 big acquisitions here. So we have to factor that in. I only want to factor in revenue growth based on organic growth. I do not want to factor in revenue growth based on acquisitions. Just organically, how would the company do if it stopped making acquisitions? So what's a reasonable number, do we think, for QuickBooks? Mo?
5, 6, 7.
I agree with that.
That low?
Yeah, I agree with that.
Jeez, okay.
Now remember, our goal here is to be conservative and then there's 10,000 companies out there. Our goal is to be conservative and find the 20 to 40 that make a lot of sense for us based on conservative estimates. That's what we're trying to do. Profit margin, very consistent.
I think it's going to stay around there. I don't see why it would
I think
change.
so too. Because there's the way profit margin drops is if there's a lot of competition. So in order to keep your market share or gain market share, you're dropping your prices and you're spending more to really expand yourself. I don't think that's happening here.
No.
Sage.
So 18, 20, 22?
No, I disagree. I think 20, 21, 22.
Yeah, that's what I would do. I just keep it right there.
Yeah, I actually just keep the profit margin the same. Free cash flow margin. Now look at their free cash flow margin.
As well, Paul.
It's significantly higher than their profit margin. Don't know why. Maybe it has to do with software, the way you depreciate. Because when you're a lot of companies, when you create software, you cannot expense it until it's fully implemented. I don't know what the reasons is. This is part of doing your due diligence, but I don't know why free cash flow margin is significantly higher than the profit margin. I would have guessed for a company like this, it'd be very similar. But what do we know? So 29, 31, and 32 is the numbers currently. Do we want to do the same thing? 29, 30, 31?
Yeah, I would just keep it consistent.
Okay. PE.
Not 84?
How do we feel about 84 being our PE?
I'd probably go like 87, 89. I'm kidding.
Yeah, I'm sure you would.
Just like Tesla.
Yeah. 14, 16, 18?
Yeah, I think so too. Maybe 15, 17, 19 because it's got quite the moat here. But guys, you can't justify an 84. This means that for every $1 in earnings, you're paying $84 for it.
Yeah.
That's a lot.
That is a lot.
The historical average for the stock market is 15 or 16. Why would you pay a ton for QuickBooks without major growth potential? It's not like it's growing 30% a year for the next 10 years.
No.
We're talking about 5, 6, 7% growth rate for the next 10 years. Pay a premium for massive growth, for good growth. Don't pay a premium for what I consider to be ordinary growth. So, what'd you say? You said 14, 16, 18?
Yeah.
I would do the same thing for free cash flow.
Yeah.
And Seth, can you please explain to everybody why I always pick 12.5% return for our desired
yes,
return.
if you're watching at home and you're new to this, you can put your money into a standard ETF, VOO, SPY. You can get somewhere around 10%. This is proven over the past 100 years, 150 years. But if you're going to put some money in an individual stock, there's more risk. We want more reward. We're looking for 12.5%, baby.
Okay, so we put everything in here. We hit the analyze button.
Why do you say it like that?
$635 is our current price and our desired price. Oof.
Uh-oh.
Oof.
Oh, hell no.
Guys, we have a low of 97, a high of 200. All right, so somebody out there is going to say, Paul, you're being too conservative. I'm not, but I will humor you.
Jack it up. Jack up the revenue. And
let's jack up the revenue growth. Let's say you apply to, let's say we change the PE to 20, 22, and 24. Same with and saying, hey, listen, it's a fast growing company. Let's pay a premium. Let's increase the growth rate, 10, 12, 14. This is how overpriced it is. It's still massively overpriced, people. I went and changed it, and you might sit there and say, well, 20 is, if you believe 2022 and 24 is too low for a PE, just stop watching us. We're not the channel for you. It's just move on because we're not the guys for you. This is not going to make any sense to you for the rest of the time. It'll take probably some hurt, some financial loss to have that happen, and I'm okay with that. But in the meantime, this is just showing how ridiculously overpriced Intuit is. I love Intuit. I'm going to add it to my watch list, which is coming soon for our software. So either way, overpriced.
Okay, Paul, tell folks at home how they can get everything that's on the big board behind you.
So guys, we created the software because our users kept asking for us to do analysis on companies. They want to do their own analysis instead of waiting for us. So we created the software. You get everything you see here, everything you saw in the video, everything that's coming soon, and you also get it all on your mobile phone through Android and what's the other company?
Apple
through iOS. So you get all that. You get exclusive daily content, 2 or 3 videos per day that we send to you guys that's exclusive just to our Everything Money subscribers. You get access to Seth Mo and I. You get 30 years of financial data. But most importantly, one of the biggest things we got is most people felt like they were alone. Like, you know, we have a very, very different view of the world. And if you do too, you probably don't have many friends around you can talk to about it. This is over 6,000 people currently in our chat from all over the world where you can discuss all of your financial ideas, your investment ideas, even crypto. The people are in there talking about crypto. You get all this for only 90 cents per day. If you can increase your returns or decrease your losses by 1 or 2% a year, this would lead to hundreds of thousands, if not millions of dollars in extra gains in your lifetime for only 90 cents per day. Less than a cup of coffee. It's a no-brainer, guys. 90 cents a day, and your price is locked in. 2 ways to sign up, Everything Money or Patreon. The benefit of everythingmoney.com directly is we are not big enough to charge sales tax yet, so you'll save on the sales tax for quite a while. 90 cents a day, go sign up.
Okay, if you want to trade this company at a quicker pace, swing, momentum, long-term trade, you can join Mo and that glorious Bid and Ask Nation, and he will show you the charts right now. Baby, what's going on over there?
Look at this climb since COVID. This is incredible.
That.
Nobody was paying their taxes here, and then everybody paid their taxes.
That was me. Go on.
That was me. So right now we're getting to this all-time high, and it's just stuck right there. It's been trying to get through for almost 2 weeks, and it can't do it. So earnings are coming out maybe tomorrow. Be careful.
Be careful on earnings.
Today's the 18th. What is it? Let's see. Oh, they report tonight, so be careful with that. Now, with that being said, what would I do here? I would wait for earnings, see if it goes up here, see if it comes down here, then play it off of a swing trade from and Seth, look at this volume. Look how consistent that is. With the exception of a few drops, this is incredible. Now, what surprises me the most about this stock, it's actually a very good stock to day trade. You have movement almost every single day in some fashion to go long or short, which is just incredible for a $650 stock. So what am I trying to say here? Throw this on your watch list to go to day trade. When you're over 80%, jump into it and go long. Look for your engulfing candlesticks, your volume. You have days where you can also go short on it. This is incredible. I never thought that I would put Intuit in the day trading category. But if you want to learn how to day trade, come and join me in the Bid and Ask Nation. You get my Trading 101 series, which is going to teach you all of the rules that you need to be successful doing this. You get access to the Discord, which is 900 people that are in the same boat as you and the same way of thinking as you. The Trading 101, did I say Trading 101? Yes. Employed Trader series. And you get access to my monthly seminars, which I do once a month on a Saturday. Come and join me.
That is our take on Intuit. We will keep you updated as time progresses. If this comes down into our sweet spot, we'll let you know if we're buying this. We love the company, don't love the stock price. Thanks for watching. Fondle thumbs up. We'll see you next video.